is variable cycle to cycle. It can chase, skirts or toothpaste prices or oil. It can chase financial asset prices. It can chase metals prices. So it seems to me that too much money is what we have just on inspection, and what that money is going to chase remains to be seen. I think that we will see higher conventional CPI inflation sooner than you expect, based upon the apparently dawning odds against it that the output gap suggests. I think that the output gap is going to be a red herring.
Does the Fed need to raise rates?
If I were running the Fed, yes. I think 0 is the wrong rate for almost any economy. And the Fed, I think, is embarked with a zero interest rate project. It's embarked on a vast experiment in moral hazard. The trouble with suppressed interest rates, with zero interest rates, is that they're like, interest rates are the traffic signals in a market economy. And everything's green. And the junk bond market is up 30% year to date. The leverage loan market is up massively. All this credit stuff is coming roaring back, which is good because it indicates a healing of our financial system. But you have to wonder whether these interest rates are the right clearing rates, or whether they are rather the imposition of the central bank. So I think that the rates are kind of too low.
So if we imagine for a minute that you were running the Fed, in fact, I really like that idea of you running the Fed.
Actually, I'm kind of busy.
But I don't know if we could convince you by the end of the show. But what would you do with the bank's toxic assets?
It seems to me, to quote an anonymous bond trader, there are no bad bonds, only bad prices. And toxic assets are a defined term. To me, we ran a piece in Grants last fall, and the headline was Toxic Treasuries, Super Safe Mortgages. And our line, which we still hew to, is that Treasuries were mispriced horrifically at 2% or so in the 10-year. That was a toxic asset, whereas mortgages at 50 cents on the dollar in some of these residential mortgage-backed security structures were actually quite promising, because they were value-laden, because they were cheap at the price given the risk. So I still think that Treasuries are mispriced. So that's to me is the toxic. There's, to be sure, there is residual toxicity in all of these screwy structures that Wall Street invented. But there is general mispricing, and of course a very huge asset class, namely government securities worldwide.
So you could have really bad inflation, devastating inflation that hurts financial assets and hurts everything, without a wage price spiral. If there was just so much money chasing
skirts.
Chasing skirts or whatever. You don't need, so
I heard that.
See, that makes me reevaluate the whole wage price spiral. Was that just specific to the 70s and what happened, or it doesn't have to happen that way? Did it happen in Germany when they had the wheelbarrows full of cash? Was it a wage price spiral? Or
no, that was a central bank, and I mean,
so we can do it without
the currency collapse. So there are plenty of instances of very weak economies generating very high inflation.
Yeah.
Someone
looking south of
Great, we've been hoping for that.
I know, that was my last hope.
Someone we know did a Google search for the words inflation and deflation. And deflation turned up 4.6 million results. Inflation gave 10 times that. Do you think the worry really is about inflation and not the opposite?
Oh, when did this person do the search?
I think today.
Today, yeah. I think you would have gotten a different result a few months ago. Speaking of contrary opinion, there's something that ought to be concerning. Namely, Bloomberg, I think, reported that 15 out of 16 primary government bond dealers are in agreement that the Fed will not move before the year is out. Now, the federal funds futures market, of course, is indicating that a tightening is coming rather sooner than later. And if your hairs on the back of your neck stand up when there's too much when there's unanimity of opinion, then one begins to worry about this. The Fed has proverbially been late, and literally, it was like 2 years raising rates after the recession of 1991-92. It was like 2 years or so raising rates after the tech bust of the early aughts, and neither one of those occasions was the financial system apparently dying of a fatal heart attack.
But that was under the incrementalist Greenspan, right?
Right. Well, Bernanke has shown certainly a willingness to print money and a reluctance to tighten. But everyone expects that. So,
I quoted you at the beginning of the show
saying,
yes, capitalism without financial failure is not capitalism. It is a kind of socialism for the rich.
Right.
So if you were heading the Fed and everything else, what would you allow to fail?
Well, I would certainly appoint a
failing?
vice president in charge of failure because it is much too important to be left to chance. And, you know, the idea that some institutions can't fail is one of the great weaknesses.
So what should fail? What should be failing right
you want
now?
like a ticker?
Yeah.
You want a ticker
Just
symbol?
give us a couple of things that should be failing
It begins
today.
with a C.
Okay.
The Wall Street Journal yesterday editorially proposed that
Yeah.
Citibank go broke,
Right.
which I
So
thought was
Citibank,
kind of a new
anything else?
chapter in the history of
Can you give
editorial
us one
comment.
more thing that should fail?
Well, I think that Citibank, let's talk about it. Citibank is a rogue bank. It has been on the verge in every cycle, in every credit cycle, going back at least to, what, 1988.
Well, as of this morning, it's the best capitalized rogue bank in the country, at least according to them.
Yeah. Oh, by the way, it goes back further. It goes back to the LDC crisis in the 70s.
Jim, we want to thank you very much for coming in today.
Entirely welcome,
Appreciate your time.
Becky.
We are out of time, but we'd love to have you back very soon.
Thank you.